Hello, everyone. Welcome to another edition of Harness Money. And it is Monday. The markets are open, and this is the time to break down all the news. There is so much that has happened that I wanted to break it all down. Some very interesting stuff. Let's go ahead and just jump right into all of the news that has been happening. I've written it all down here. And right now, the market is down somewhat. It is down to 30. The Dow Jones is down to 33,707. So it's down about 100 points today, but it's been fluctuating. So who knows where it will end up by the end of the day. The NASDAQ is down 50 points to 13,856. And the price of Bitcoin, of course, is up. It's at 60,853. Just continues to climb and drive up in price. I think it will continue to go up over time as more and more investors get into the crypto space. Now, this takes me to probably the biggest story of the week in my mind, and that is the Coinbase IPO. They are going public on Wednesday via a direct listing, which is unique. They didn't do a SPAC. They didn't go the traditional investor banking method. They just are going to do a direct listing onto the markets, which I actually think is pretty smart on their part. We'll see if it actually works out, but you're kind of bypassing a lot of the traditional hype that has to go around. You don't have to go and do all these presentations to the big wigs and on Wall Street, the investment banks, to get these big investments. You just take it right to the market and see who buys into that stock. And I think a lot of people are going to be buying into Coinbase. The users on that platform continue to increase. Crypto becomes more popular. And of course, the profits, they're showing profits. So unlike a lot of businesses, they are having some momentum behind them, unlike the other business of the hour, or the news story of the hour, which is Uber. Their CEO came on television and said that they may one day start delivering Mary Jane to the masses. That is just amazing. It's amazing to think that that number one is that Mary Jane will become nationally decriminalized, and that it will become so prolific that it will eventually be able to be delivered straight from the store to your house via UPS, via Uber. That's the plan, which I do think this is coming, because Uber made the other acquisition not long ago of delivering alcohol to your door, a company that specialized in delivering spirits. So maybe not pre-made drinks, but delivering packaged, bottled liquor to your house, which has a lot of hurdles. There are a lot of hurdles to that. Every single state has their own laws around liquor and around MJ and just these different kind of sin products that are out there. So collecting them all together and getting them available on Uber will be a very interesting model. But if they can make it happen, this will be a very profitable avenue for that company. And I definitely think Uber is going to have a big year, no doubt. I think Uber and Lyft are going to have a big 2021 and 2022. I think demand, just from the people that I've talked to in my own circle, in my own life, they're definitely going out more. They're definitely planning on traveling. They're getting together with friends. And I think this is just a microcosm for the entire economy. I think everyone is going to try and go traveling at the end of 2021 and then into 2022, because they've got the money. They've stayed home. They've saved their money. Now they're ready to go spend it. They're ready to go to the Caribbean. They're ready to go on a cruise. They're ready to go international over to Europe. We'll see if that actually happens. But people are ready to travel. And I think that's going to be a huge demand put a huge demand on Uber and Lyft. So I fully expect their stock prices to increase. And I think, is this a year that Uber finally gets a profit? I don't know about that. They had a big hole to climb out of. They had a lot of money that they lost in 2020. I'm sure that's going to be their worst year in terms of operation for a very long time. It was definitely the worst year for airlines and hotels. I think all of those sectors are coming back. Airlines, hotels, and of course Uber are all going to be in demand for 2021 and then going into 2022. But just the fact that we'll get to the point where one day MJ will just be so ubiquitous that it can be delivered straight to your house, that's amazing. that's definitely progress. Some for better or for worse, I don't know. Depends on how you look at Mary Jane. It's definitely progress in the United States for something like that to happen. It's probably a progress for business. Business always seems to find a way to make things happen when the government cannot, or when the government is slow to move. Business usually leapfrogs past it. So that will be very interesting to see how that plays out. I also think one more item with Uber. Uber is, I definitely see them as being a visionary company. They have big goals. They want to tackle big sectors of the economy. They don't just want to drive a person from point A to point B. They want to have an autonomous drive from point A to point B. They want to be a delivery of everything, delivering all kinds of goods to your house. That includes groceries with the acquisition of the Uber Eats acquisitions that they've made. That includes all kinds of freight. They'd like to get into the freight business before. So they really want to be an entire delivery business. So, it'll be interesting to see if they can actually make that happen. If they do end up becoming the next UPS or the next FedEx with their delivery system, it'll be interesting. And I think the software that they have created can apply to so many different areas. They could license out their software to be profitable for other purposes. That is also interesting. So you could possibly order like a plumber or a maid or just some type of service person, maybe like a Fiverr. It'll be like a Fiverr application that you can hire people on. So we'll see how Uber becomes more successful in the future if they can actually execute. They've had trouble, I feel like, executing in the past few years. It hasn't gone as smoothly as they anticipated, but you've got to adjust. And I think that they will be a company to watch going forward. They're definitely on my watch list. What else is going on? This is going to be a big week for earnings. Earnings are coming out for some big players, JP Morgan Chase, Wells Fargo, and US Bank. So or US Bancorp, some very large financial institutions are reporting their earnings. So that will be an indicator of the overall economy. How are we doing? How is the recovery going? Is it going to be a hot 2021 growth story when we get through all of the vaccinations and the economy starts to reopen fully? It'll be interesting to see where they are and how they perform. I also think you can break down the numbers into their loans. All these businesses have provided so many PPP loans. How is that going to affect their balance sheet? How is their defaults being affected? How profitable are they? All of those things will be coming out this week when they report earnings later in the week. Now, last week, Fed Chair Powell came out and said they're not going to raise rates, that they're not looking to make any structural changes at this time to the interest rate, so that it's going to continue to stay low, which means that is probably going to lead to a banner 2021 and 2022. I think both of these 2 years, the stock market will continue to hit all-time highs because all of these businesses are going to be, number one, more profitable, and they're all going to put the pedal to the floor. I think all of these businesses were adjusting to 2020, trying to figure out what their game plan was. And now that the economy is reopening, they're going to put all of their plans into action and try to really ramp up operations. So the economy is definitely going to be taking off in 2021, but it'll be down to execution. Which companies can actually execute their plans and which ones just kind of flounder or don't quite make the mark. That is what we will be looking for in the coming months. But interest rates are going to stay low, which also means that housing has been crazy. It has been a crazy year for housing. Hold on one moment. The people that I have talked to, number one, that are actually in the housing business and also buyers, friends of mine that I've been talking to that have either wanted to sell their house or are building homes or are trying to sell their home, are all running into this crazy real estate market, which is where all kinds of materials have gone up in price. So the one that everybody talks about is the price of wood. The price of wood has gone up, and that's understandable because a lot of wood comes from Canada. The supply chain was disrupted, but a lot of other materials have also gone up in price. I was just reading about steel has gone up in price and concrete has gone up in price. And that's really interesting to me because both of those elements are going to be huge factors in the Biden infrastructure bill. If Biden is able to pass the infrastructure bill, then there will be an even bigger demand for steel and for concrete. So those could be investing opportunities. If you invest in them right now, you could get in before he passes the bill and then ride that wave as long as it continues. But they are talking about that you might not see a bump in the infrastructure plan right away, that the effect of the infrastructure bill is going to be a 10 to 15 year plan. They're already talking about the plan will be paid for over that period of time, 10 to 15 years. So when they pass the bill, it's not going to be paid for right away. It's going to be paid for by higher corporate taxes and higher individual taxes over 10 to 20 years, which also tells me that if you're investing today based on the infrastructure bill, you better be prepared to hold on to those equities for that amount of time because you're not going to see the return until later on. But it is definitely something to watch. I don't know. I think I'm kind of biased because my state has a very good infrastructure. They're constantly trying to improve the infrastructure. They pass bonds to make more infrastructure. And it's just a very, I don't know, forward thinking state in terms of building for the future of business and attracting people to the state. A lot of my state is focused on attracting people to come live here versus maybe some other states really do need. So in my area, I don't see necessarily a need as much for an infrastructure bill, but I get it. I probably live in a newer part of the country versus some of the older parts of the countries. They were talking of the country, Ohio, maybe New York, New Jersey, Connecticut, even maybe around like the DC, Virginia, Maryland, that whole area. They probably do. They probably do need some infrastructure revamp or some more work on roads and bridges and things like that. So I definitely think that infrastructure is probably needed in specific areas. Is it needed to the tune of $2 trillion? I don't know. There's a lot in the infrastructure bill that isn't classified as traditional infrastructure like broadband. Broadband is a newer thing in the economy that is considered essential. It wasn't prior to the pandemic. Broadband wasn't necessarily considered essential. Same with 5G. Is 5G cell phone internet, the 5G network, an integral part of the U.S. economy? Well, it is now. It's becoming. There's also some other things like childcare and elder care. There's a lot of money in the infrastructure bill for Medicaid versus you wouldn't necessarily think of Medicaid as infrastructure, but there are ways that you can classify that as infrastructure. Same with the pandemic spending. There was a lot of spending in the pandemic bill that might not have been considered, I don't know, aid relief or virus relief, but it was passed. It was considered important. It was considered integral. So there we have it. So it'll be interesting to see what actually makes it across the finish line. If they have to do the whole reconciliation thing, then I think a lot of things will change from where it is today to when it actually becomes passed. Because there are a lot of senators that do have leverage that will be able to make changes, that will be able to pass pork for their particular districts or their states, and then they will also be able to make changes to the actual structure, to the taxes, to the corporate tax, to the personal tax. All different kinds of changes are going to have to be made before it actually becomes final. So that is still ongoing. This also gets to the next topic that is dominating the news, and that is chips. This is the semiconductor chips, the big deal between the South Korean SK, Taiwan semiconductor, and then you have all the US chip companies battling it out. So NVIDIA and Intel, I like this a lot. I like this story a lot because, again, it goes back to the infrastructure bill. There are a lot of companies that are involved in the production of these chips that you wouldn't really think about as being integral to the process. So I made a list here. Let me get to the list. Where is it? It is Okay. Robotics. Here we go. That took forever. Sorry about that. Companies that are going to be involved in the chip: NXP Semiconductors, ADI, Analog Devices, Micron Technologies, Texas Instruments. So Texas Instruments, you don't really think about when it comes to chips. Applied Materials, Lam Research, NVIDIA, Teradyne. All these companies are set to benefit from the current market for semiconductor chips. All of these car companies are sucking up all of the resources needed for computer chips. Basically, every single car on the road is becoming a full-fledged computer. And they even want it to be a smart computer, an AI-powered computer, which takes even more technology. So I feel like we're just at the very beginning. This is another industry where if you start today, you can reap lots and lots of benefits down the road. If you already invest, and a lot of these companies are already high valuation. So Taiwan Semiconductor, NVIDIA, Intel, they're already pretty high valuations, but the demand is there. They are going to keep growing. And if Biden does pass the infrastructure bill, he's already making it a point that there's going to be a lot of money for electric vehicles, that he's pushing an electric future for vehicles, less gas, more EV. And that means chips are going to benefit. There's also another play there for, I believe, the charging stations. So right now, there's not a charging station all the way across the country that you could do a road trip through all 50 states. But if the Biden infrastructure passes, I think there will be. I think they will ramp up production on the charging stations around the country for these vehicles. But I definitely think these companies, so NXP, ADI, MU, Texas Instruments, Applied Materials, all these companies are going to benefit from this chip shortage. They are going to increase in value because they provide the materials and they provide some of the technology that goes into chips. When you think about chips, it's not just the actual physical manufacturing of the chips. A lot of these companies have different technology that goes into making the chips. So printing and patents and the actual raw materials that go into the chips, those are all part of the process, something that we are going to have to develop in the United States and globally across the globe. And we're also going to have to work with China. China has the most raw materials on the planet. So we're going to have to work with those companies to actually produce those products. Very important. So that leads me to the next story, which is related to China, and that is Alibaba. This company is amazing. It all continues to amaze me. Full disclosure, I am a investor in Alibaba. I do think that Alibaba has a bright future, but they were fined $2.8 billion in the market by Chinese regulators, by the Chinese government, $2.8 billion that they are going to have to pay to the government. But shockingly, the stock popped. The stock went up after they were fined this money. And they're saying that it is because they're finally hoping that this fine puts behind them the regulatory scrutiny that they had been under. The Chinese government had basically been saying that they were too big and that they were going to break them up. And the whole Ant fiasco where they were going to list Ant and then that was shelved and people were just uncertain about where the future is. They think that this fine now puts behind Alibaba the risk of the regulators coming in and, I don't know, breaking up the company or just making it more difficult to do business in China, that they were getting a little bit too big, having a little bit too much power. But this puts it behind it. I definitely think that Alibaba has enough money that they're going to be just fine. That this is a dent, kind of like the Johnson & Johnson. Johnson & Johnson was involved in the opioid epidemic, and they were fined for their role in that. But they have enough money, or if they don't have enough money, they can go out and raise money, go borrow that money to pay it back. So it's like, I think that Alibaba will be just fine from this, and that it is still a great business. I think Jack Ma is visionary, that his influence on this company and just the rest of the world, it can't be denied that the impact that he has made. And I think they're going to have a bright future ahead of them. I still think that even though they're so large in China, they still have a long way to go. They still can improve and grow that business over time. Now, just a couple more items that I'm thinking about right now. I am listening to the Motley Fool. I'm listening to the Rule Breaker podcast. I like to listen to podcasts to get different ideas. I love Spotify as a business. I think is a great business. I think that's another company that is big but can still has room to grow. And just all the different podcasts that are on there are so good for getting a different point of view. I like to think in different ways. That's what I like to learn about and think about, is how can I think differently, or what am I missing? What do I not know as an investor? Because that is how you really make big gains in the market. If you're an index investor, that's fantastic that you're going to put your money and it will just grow over time. If you're a stock picker, if you are someone that wants to invest into individual companies, I think you need to have the mindset that you don't know everything, that you need to know more. You need to know more information to be more informed. And that is why I like to listen to and read things that make me think differently, give me different ideas, and also try and identify trends that are coming. So brand new trends down the road, like space or electric vehicles or e-commerce online, this infrastructure that's coming. You never know what is going to be the next 10, 15 year trend down the line. So you always want to be learning. And let me give you some more stocks. Another stock that is having their earnings reporting is Lovesac. Lovesac has always been an interesting, I kind of put them in the same realm as Restoration Hardware. I've been involved in Restoration Hardware, an investor with them for a long time, because I really really love what they were doing with the luxury space. That I just thought they had something that nobody else did, that they were doing some type of home decor that wasn't just your typical, I don't know, couch or your typical room design. They were really taking luxury to another level. And then they were actually creating this world, creating this glitter dome where people could enter and they could be in that space. So same with Lovesac. I think Lovesac is creating products that are, they do a lot of home decor. And of course, the home has been really hot. So home training, home decor, just your entertainment space at home, all has become more popular in the past year for the obvious reasons. But Lovesac has been one of the ones that they're doing their reporting this week, and they create home furnishings that are just very unique, very different, and I think very popular and trendy for this time and going forward. So it'll be really interesting to them. JP Morgan, NVIDIA, and Uber. Those are all the companies that I am watching right now. So this has been a Harness Money Live. Thank you for watching. Don't forget to hit that like button, subscribe to this channel for all of my latest videos. My mission is to help you and to work on my own building wealth. I want you to build your wealth so you can reach financial independence, so that you can help other people. Thank you for watching. Until next time.